From the Nasdaq market site in Times Square, I'm Brad Smith, and you're watching the Millennial Report. So today, we've got quite the treat as I'm joined by business and markets reporters whose amazing work you may have already seen before, live or published. This episode, we'll be talking market trust, trading technology, and corporate culture, all critical touch points for our millennial generation. And so, here to weigh in on these topics, we've got Krysia Lenzo, who is the producer and reporter at Cheddar, Meena, Thiruvengadam, who is the head of audience development at Business Insider, and Nick Martell, who's the co-founder and co-CEO at MarketSnacks. There's a lot of trust that's lacking from the millennial community within the markets right now. And Krysia, we'll start with you. Sure. For this particular topic, we know you have a great deal of background with all of the broadcast news networks. What are some of the ways that your team at Cheddar is really advancing this discussion among the millennial audience?
For sure, and thank you so much for inviting me today. I'm so excited to be here with my good friend Nick and Meena. Glad to be here with all of you. So as you mentioned, yes, I did work at some major news networks. Prior to joining Cheddar, I was at Fox Business and also at CNBC. And I think part of the ways that, in terms of how we differentiate ourselves at Cheddar is that we really reach out to the viewer and try to get a sense of what they want to hear from us. I think one of the ways that the bigger networks don't seem to get their finger on the pulse of what millennials want to hear is that they bog us down with a lot of jargon and they go way too much into the weeds when they present business news. And I think that's a huge problem because business news can be exciting, and I'm sure all of you guys are business news junkies just like me, but that's not the norm when it comes to millennials. Millennials really want to get a quick summary of what's going on, but also they want to feel a connection to the CEOs that are out there. For example, if we're talking about Tesla, we want to get a sense of what Elon Musk is saying. It's not just his stock price, because what he's saying does tend to move his stock price. So we're trying to portray the news in a digestible way that also tends to be funny. We have a bit of a sense of humor at Cheddar, as you guys can attest to as well, for him being on the show and also having reporters from Beyond BI on the show. We want to present the news that people want to hear it in a way that's tongue-in-cheek, but we want to give them a sense of what's going on without, as I said, too much jargon, too much nitty-gritty. An overview is really what millennials want to hear about. So, and that's why it's transparent. It's because we do have this connection with the CEOs, with the audience, and we make that connection stronger by getting their feedback every day. So.
Absolutely. And you touch on topics, and that's a huge kind of point that we may need to stay on for a second, because the topics that we're actually reading up on make a big deal with the outlets that we're actually willing to have that affinity to and that connection to over time. And Meena, shifting to you at Business Insider and formerly at Yahoo Finance as well, what would you say are some of those resounding topics that millennials may be looking into and reading up on and really grasping and have a lot of interest in?
I think the biggest thematic driver, I'd say, is millennials want to work hard, make their money, and then use it to enjoy their life. Some of the kinds of stories that we have that do the best are really personal finance related, like how can I retire early, or how can I make my dream company a reality and still be able to afford the lifestyle I want while making that happen. So it's really like, what do I need to know and do financially to live the kind of life that I want to live?
Right. That's a great point. We're the generation that some have said thrive on experiences, which is, I mean, it only comes out in the point you just made. We want to know how to make money so that we can go places, we can do things.
Millennials have a lot of aspirations financially, and they're willing to work there, but they want to enjoy what they're working for.
Absolutely. Now, Nick, in doing your MarketSnacks report, you have kind of what the tongue-in-cheek delivery that Krysia mentioned earlier, but it's a very unique experience that you're driving with those customers and the e-newsletter followers. What can you tell us about that?
So for us, it was about establishing a connection between these brands that millennials are embracing and using every day and actual stock market news that they had no idea about. So, we would be sitting there talking to our friends about how we just devoured some Chipotle burrito, or we'd be talking about the sheer pants debacle at Lululemon from 2014, and there was a direct correlation between those and what stocks were actually doing. Right. The problem is no one was really making that connection clear. Sure. So for us, it was about recognizing that there was a need for that in the market, where there would be a few news stories kind of fragmented in the industry between the Wall Street Journal and CNBC, highlighting those, curating them, and then making them very quickly available in that digestible way that Krysia was mentioning before.
Absolutely. Now, staying on you for a second, because we have another topic that we definitely want to tackle during this segment, and that being trading technology and really products as well that fall underneath of that. So one of the trends that's out there right now is that the majority of millennials who are investing their money within the stock market are choosing to select ETFs.
Right.
Do you think this is a trend that we're going to continue to see, and if so, why?
So the funny thing about ETFs is that this to us is exactly an analogy for cord cutting. So the reason why millennials are jumping into ETFs are the same reasons why they're quitting cable and just watching stuff like Cheddar or Business Insider videos on TV. Right. And the reason why is because ETFs are cheaper, so you've got lower expense ratios. You have transparency, that key issue that we talked about before. ETFs are reporting what their holdings are on a daily basis as opposed to quarterly. And then finally, ETFs have smaller minimums, so you can really jump right into it. And you're seeing some trading platforms that are now encouraging ETFs. So it is not surprising that these are the easiest way millennials are getting involved in the markets. But I think that there's also a historical context here we have to take into account. So millennials are dipping their toes into the investing waters right now through ETFs. And the reason there's more of a hesitation than with other generations is because millennials grew up in a very particular time. So for us, the 90s were an economic boom that we were busy watching Nickelodeon. We didn't really understand what was driving that. Then when we actually get meaningfully engaged with the stock market, it's around college, it's 2008, the Great Recession, a financial crisis. So there's that natural distrust that develops. And so I think longer term, you're going to see millennials engaging with stocks more individually and more traditional modes of investing through fintech. But for now, ETFs are that easy way to kind of cut the cord and get engaged with the markets.
Now, when you say fintech, do you mean apps, or are you speaking of certain companies that we should be looking at, a lot of millennials perhaps engaging with? Because I know I utilize all the apps to the depths of the earth, to make sure that I'm getting the relevant information. But if you could just clarify that.
Yeah. So for fintech, and we say this in MarketSnacks all the time, fintech is finance for millennials. That's what it is at its core. It is technology that's being used to finally engage millennials in traditional financial services. And that's why banks are so focused on this area, and you have so much coming out of the fintech industry. And yes, it's apps, but basically it's taking a technology-first approach to making basic banking maneuvers that we would consider ridiculous now, like just going to a teller or making basic financial transactions peer-to-peer, making those easier by using what we millennials use on a daily basis, which is just technology and specifically mobile.
Right, and staying on the basics for 1 second, one area that they're diving a lot into is this area of Robo-advisor and purchasing up some of those firms who are already creating those to better target millennials. And so, Meena, shifting to you, you have all of this background in this algorithmic culture that we've each grown up in. Do you think this is a trend that we'll continue to see, a lot of millennials tapping into those Robo-advisors?
Definitely. I mean, I think that they're easier to use for some people, and they're a good way to kind of, as you're getting your feet wet, start learning about things. And I think that algorithms definitely can be beneficial. There are certain things that you can do with an algorithm that you can't do with a human, but I think that there's also going to be a real importance to having humans involved there. So I think that the most savvy people are going to be people who know how to take advantage of what a robo-advisor can offer them and which humans they might want to consult in addition. I'm a big believer in having more than one source for every type of information that I consume, and I think that your smartest investors do the same thing.
There's a lot to be said for the historical information that a human also stores, and knowing certain sentiments that a computer or some type of algorithm may not pick up on. So,
And I think the standards are really high for millennials in terms of customer service. We have this kind of innate reaction that we're the generation that's sick of calling a line to get customer service and the person being millions of thousands of miles away and really not having a connection with them. So I think customer service is key here, and it's going to be interesting to see what robo-advisors do to kind of compensate for that, where they find the balance between the computer and the person.
I think everybody wants on-demand assistance. It's like, we want to watch our Netflix now, and I want you to answer the phone when I'm ready to talk to you. None of this push one when they're available. It's I'm calling you now, so provide me with the service I'm looking for.
Absolutely. They're both great points. And Krysia, I do want to open this up to you too as well.
Sure.
So one thing that a lot of people are looking at right now, one step back from robo-advisors, market triggers.
Right.
And they're using that to establish an investment strategy, trading based on what the Fed is announcing one day, or what's showing up in a Bloomberg terminal, or what they may be receiving through an app. what are some of those strategies that may come to mind for you? Are there any apps that maybe you and Nick, Meena, this is totally open to you as well, any apps that you're using?
I think in terms of market triggers more generally, I think a lot of millennials are adverse to dealing with, the Fed's raising rates today, and what are they doing, what's going on with Brexit. We just don't have the time to constantly be following the market like that, and also it does take a lot of due diligence to really know what's going on, and if we have that problem with transparency and also with really digging into the weeds and knowing what's going on, that's not the best way for us to invest. Personally, I don't have any apps that I really would recommend, but I do have a couple that I like offhand that are more about saving rather than dealing with market triggers. I think that one of the apps I use is Acorns. Okay. It incorporates ETFs in that for every dollar you spend, it rounds up the change and then it puts it into ETFs, and you can really diversify your portfolio that way because you can invest in government ETFs and also all types, and it's like very fractional investing. So that's one that I like. And then also on Cheddar, we use the Fidelity app, which tracks investments that you're particularly trying to look at from a more holistic perspective. You can also get some news on some of the stocks that you're looking at, but it's more about, that's more on you to do it. Right. So again, I don't know if millennials have the time to really look at the market and follow all the Fed's decisions. So, but those two are ones that I enjoy.
Absolutely.
Yeah.
Meena, Nick?
I do use the Fidelity app as well. And then I also go back to the Yahoo Finance app if I'm looking for like a quick quote or something like that.
For quotes. That's
Yahoo
good.
Finance for me as well.
Yeah, I think Fidelity's done some really innovative things in general, and the app is one of them. The triggers that they can actually give you to encourage you when you set certain stocks that you want to follow up on, I think is really impressive. And it does so in a really strong interface, which I think is key for millennials. The other key is the mobile one, which you can get through the Fidelity app, and also I think Robinhood is another example of a company that's providing you the ability to invest in individual stocks. Right. But I think if you want a mutual fund approach too, Fidelity is a great job with that.
Absolutely. Wrapping with one last topic in discussion area around corporate culture, diversity and bottom line correlations. SEC Chair Mary Jo White has publicly announced and prioritized her initiative to build more diverse boards, which is not only restricted to race, but also means boards need to incorporate international perspectives. What do you think it's going to take for our generation as we begin to accumulate more of those seats at that table? What's it going to take for us to continue driving that forward?
Well, I think what it's going to be is first there are going to have to be those seats at the table opened up, and then there's going to have to be some paths for progress from there. I think that one of the things with millennials, myself included, is the idea of patience is really hard. The idea of spending 30 years working towards something and expecting that return to be there, it just doesn't happen anymore. So we're going to need to see that corporations and entities are really putting their money where their mouth is. It can't be enough to say, hey, I value these international perspectives and I want them to be around this table and I've hired all of these people, and then you get to that room and say, wow, we have this great diverse workforce, but how come none of them are here among this table of decision makers? So you're going to need to see people progress all the way through, and you're going to have to see those people where we really want them to have a voice at the table, or a company might say that. You're going to actually have to see that happen, where yes, we've brought in these voices, and not only are they at the company, but they're right here making the decisions that matter and have a seat at the table at those conversations that are important to them and to our constituents, whatever their background may be.
Patience, you bring up a very good point, and that kind of goes into my next question. And Krysia, I'd like to bring this up for you. So millennials are often criticized for job hopping, which some of us may be familiar with. But what's it really going to take for a lot of that trend to either stop, or what's it going to take from within the corporate culture to keep those millennials around and really drive retention?
From a personal experience, I might be considered one of those millennials. I started off working at UBS in finance, and then I jumped around to CNBC and Fox, and now I'm at a startup. But I would say that in order to get millennials involved, you really have to give them that ownership, just even literally giving them equity in a company, in a startup, or in a public company. I think that really does drive them to work harder and to really get their opinion, make sure their opinions are known. And I think that the hierarchy, particularly in the banks, with the analysts, associate director, managing director, I think that no longer should be stressed as much, because sometimes the analyst at the lowest level does have the most amount of information and does know the deal better than the boss who might be traveling. all around the world. It might not be on the ground. I'm sure you've experienced this as well with your background. But by giving the younger person or making them feel comfortable enough to express their opinion, I think that's really important in order to build that corporate culture, to get millennials to stay and to not job hop around. And that's, for me personally, I think maybe if one of my MDs had asked for my opinion, maybe I would have been there for a longer period of time. Who knows? Journalism was always my calling, but just giving the millennials that voice, I think, definitely makes that culture stronger.
Yeah, I couldn't agree more with Krysia on this. It really comes down to a management style, and I think that one of the big misconceptions out there is the difference between perks and kind of company culture and how people are being managed. Right. And there's this great point in the Andreessen Horowitz blog about the difference between perks and like having a few Shabanis in the fridge and giving access to all this Greek yogurt. Right. That's not really what's going to keep. Right, that's not what's going to keep them.
That is, you don't want me to leave for lunch.
Exactly.
So
I hear it all the time.
Motivation.
And I think that's going to be big for banks. As someone who also came from UBS, originally starting my career there, and now working with MarketSnacks and working with companies for Endeavor abroad in Latin America, I think it's interesting to see how the way that we're managed is different than we were at banks, and that it's not a focus on perks. That's not what banks can do. They can't transition into that. It's how they manage and engage their employees to really draw them up in the ranks by giving them different challenges and opportunities.
I think that a company that invests in you and gives you rewarding opportunity and gives you the opportunity to grow and do different things is one that will gain loyalty even from millennials.
That's a great point. And it almost brings me back to a college experience at Drexel. We had the co-op program. So you'd go into each of these co-op programs, these co-op cycles, expecting to figure out what you liked and what you didn't like. Right. And so it's very different here because now we're discovering you can get into an organization, and if you do a good enough job at one thing, they'll say, hey, how about you give this a try too? So we're almost in this relationship with our brands where we're saying, hey, look, if you throw more at me, I'll take it on, and we'll figure out what I'm really good at, what I'm good at, and what I should never be doing ever again. Right. And so by doing that, it's allowing a lot of those opportunities for employers to keep a lot of our generation around longer and figure out what they're passionate about, what they're good at, and put them in a position to succeed.
Millennials are going to make up over 75% of the workforce in less than a decade. Right. On top of that, almost 90% of millennials say that money isn't what's driving them. That's completely different than any other generation. That, to me, stands out as a key reason why millennials are different than every generation. Right. And if you're on a board right now and you're most likely in your 60s or 70s of a major company and you're most likely a white male, that means you're going to have to get much more in touch with who your core user base, who your core customers are. Yeah. And a key way to do that is through millennials. And I think you've seen with Starbucks an attempt there. I think there are examples where that hasn't worked. For example, if you look in the food industry at McDonald's or if you look at General Mills, companies that have struggled to adapt to millennial-focused food trends, and it's because they haven't had that millennial representation on their boards. They haven't adjusted their strategies quick enough. Cereal sales are down like every year the last 6 years. McDonald's has been struggling to adapt its menu to a sustainable one. That's because they didn't anticipate these trends and they didn't have a millennial voice on their boards to help guide them.
Cereal bars are where it's at.
The cereal bar on the go,
right?
And shove it in your pocket and then eat it when you get to work or you're walking in the door. So
I think it's interesting too that some companies.
Shabani when you get there.
True, unless your company's providing it. I think it's interesting to look at companies too like Under Armour, where they have taken this millennial approach to technology early on. Mm-hmm. Under Armour has always seen itself as a technology company in terms of the actual materials they're making, now branching out into apps that are being used for wearable fitness tech. Mm-hmm. So I think having that technology approach, which Under Armour had in the 90s, which was early, and using that millennial mindset is going to be key. And you're right, like you said, that's going to come out when you have a presence on the board.
And one of the great things about Under Armour, if we could stay on there for a second, because they have the ability to connect with the figures that a lot of millennials and younger, Generation Z is watching. They've got the Stephen Currys, they've got the Cam Newtons. So with a roster like that, who is already influencing a lot of the discussion, we're in a totally different age because now we're in the age of social and all of those athletes, and not even athletes, we've got YouTube stars who are out there influencing the conversation and becoming critical brand ambassadors for a lot of these companies. So you don't even necessarily need to be in the boardroom in some of these cases to really drive some of those conversations in a certain direction. I've been looking forward to this for a while, so thanks for sharing your perspectives here today at Nasdaq.
Thank Thank you.
Thanks, Brad.
Stay tuned for more to come from the Nasdaq market site throughout the day, and look out for the great work from each of these individuals, Krysia, Nick, and Meena. Thanks for watching.